In the 189th Block Talks, we speak with Tarun Gupta, CEO of CoinShift, who talks about how user-centric design helps crypto find product market fit. I'm your host, Mauricio Magaldi, and this is Blockdrops, your weekly digest on blockchain for business. These news are not a form of endorsement, sponsorship, or encouragement for consumption and are meant for educational purposes only. All right, everybody, I'm here with Tarun Gupta, who's going to tell us who he is and what he does with blockchain. Tarun, welcome to Block Talks.
Thanks for having me. Yeah, I'm founder and CEO of CoinShift. I actually got into the space around 2017, more of like a Lightning developer. I wanted to help scale Bitcoin on the Lightning side. So developed like a library in the very early days, around like 2017. And then fast forward to 2018, I started working on a social key recovery protocol. So my background is majorly infrastructure engineering and cryptography. And then fast forward to 2019, basically I joined by economy, which is more of like a account abstraction gasless infrastructure company. I led the team there as an infrastructure engineer and founding team member, and there actually we used to get paid in crypto. And what happened is basically every single month I need to go to the CEO and tell him, like, to pay us on time, because he just forgets to pay. And it was like very weird, right? Every single month you need to ask for this, and you always forget. So I decided to participate in a hackathon, build like a very simple solution. And trust me, like, I have built like more complex solutions before this, but this was the easiest. It was like a weekend project, but none of the complex project worked. And what happened in the hackathon, I built like a simple solution where you can pay to multiple people in a single transaction, saves you a lot of gas fees and time, and you can directly do from your treasury account, which is on Gnosis Safe Multisig, right? And a Protocol Labs founder like Juan Bene and Consensus, they just loved it, and they reached out. And after that, I think like we got our first pre-seed round, and that's how the concept started. We can dig deep more into that, but that's my brief story.
I love that. I love that you started from a need, because maybe will agree with me. Crypto usually starts from the technology because everything is so cool. So let's just build something and see if there's a problem we can solve with that. And you started off straight out of a need that you lived yourself and built something in that capacity. Now, walk me through the early days. You mentioned that you're coding for Lightning, and what was the state of Bitcoin at that point in your experience?
When I first time saw Bitcoin, I think started working, it was like $300 or something, right? And there was like before 2017 bull run, right? And what was the state of the Bitcoin? As basically everyone believed Bitcoin will be the future of money, not like only store of asset. And there will be a time when a lot of people will hold Bitcoin and there is less volatility, right? And then everyone wanted to solve to scale at a Visa, Mastercard level scale, and that's why Lightning Labs built this Lightning network, right, where you can just have these payment channels, etc., and you can just offload, which is very similar to what layer 2 strategy is for Ethereum. But Lightning Network was the first player, right, like who wanted to do this. And I was like, okay, as an engineer, I was like, okay, let's build some simple library based on their grpc layer to help Lightning developers to build Lightning apps faster. It was like an open source library, just out of my enthusiasm, you can say. And then very soon, like, I realized Bitcoin, because the fundamental layer does not support programming, right? It cannot solve the entire financial system. It has a very simple use case, which is store of value. And you can once you go more deep into economics and all that, you'll understand, okay, like, it is a better form of reserve end of the day. And obviously, to settle very large trades like maybe 200, $300 million, maybe you need Bitcoin in the future to do that, because you might not trust any single currency. But for normal people, it is not practical to keep their money in Bitcoin, right? And after realization of that, I basically fully moved into Ethereum, and because it was programmable. right? And as an engineer, it's like, imagination is the only constraint here, basically, right? So you can build anything on Ethereum.
Interesting you say that the imagination is the only constraint because um, a quick background on me. I started my career coding for COBOL. Okay. And because those were very expensive computers, you had to optimize even for compilation. Even before you knew if your code would work, you had to optimize so you wouldn't spend cycles, and the cycles are expensive and all that jazz. It feels to me, even though I'm no longer, I haven't been a programmer in a proper engineer in years, that the programmable blockchains kind of force you into the same space in having to think about the gas fees, the size of the blurb or the block size or the how did that work for you when you first broke into blockchain engineering?
I'm not myself like a smart contract engineer, right? But I understand like how smart contract works. I'm more on like, Java, JavaScript, Go language. But obviously these are like just programming languages, right? You can learn any of it. It's not about it. But as you are saying, right, like when you're reading these contracts, because you need to interact with these contracts. And obviously when you are doing a lot of batching operations and all that, if the contract is not written well, it will charge you the gas fees more, right? And it's pretty challenging. So that's why we work with like Gnosis Safe, and they had like a very vanilla kind of multi-sig contract, which is like audited by Vitalik as well, right? And it was like a simple multi-sig, and everything else was a module on top of it. So if you want more complexity, you can just add, enable, or delete that module based on your requirement. But the vanilla implementation was just basically multi-sig account where you need to collect signatures. So in their V1 of that version, I'm really liking this conversation. It's like, remembering my old engineering days. These days I don't code much. So in the very beginning, we realized, okay, it's a very modular architecture way ahead. And their first version was very gas heavy, because for each signature, you need to approve on chain. So in their V2 version, they really made it like, okay, the signing logic can go off chain. You need to achieve consensus off chain, not on chain. And if you don't achieve consensus, and let's say you are stuck in between, you can reject the on chain just to prove. So it was like a very good architecture, and then I loved basically because of this off chain signing process. So infrastructure engineering is like my bread and butter, you can say. So I wanted to design like a whole signing infrastructure ourselves, basically, and then we build like an alternative, better signing infrastructure on top of base vanilla multi-sig contract, and that's how the journey started, basically.
So let's jump forward into your hackathon where you found that you were trying to solve a problem. You went through all of that. How fast did you guys move? How was turning that idea into a proper business? Can you walk us through a little bit of that entrepreneurship process that you've gone through?
So I've been doing startups since third year of my college, right? And it's like, I have this thing to build something new from scratch. But what was not working for me in my previous startups is like, to scale as a business, right? And scale as a product, build a team, and really scale well, right? So I've seen like all kind of journeys before, right, where founders go mostly wrong, or entrepreneurs go mostly wrong in terms of having a strong bias towards customer, right? You should think about distribution first before actually when building anything in this world now. So and and then after this realization, I was like, I was doing a job in bioeconomy, right? I decided at that time I will not do an entrepreneurship again. I'm very good there, and then because of this problem, I decided to be in the hackathon. But what happened in the hackathon is like it was a so simple solution. You cannot, it's just a simple batching contract, which is just batching the basically payouts in a single transaction in the EVM state, basically. So it's like, you have a memory, right? In that memory, you are just having a single call to really execute the batch, right? It is nothing rocket science. And everyone was just blown away. There is a video online where the founder of Protocol Labs, they were just blown away, right? And I was not understanding why, right? Like it was very difficult for me as a very complex cryptography background and all, like why they like it, right? But after that, it was like very smooth because people wanted it, nobody was doing it. We were the first one. And once we got our pre-seed of $80,000 from Consensus and Protocol Labs, it was like a 3 month sprint of actually getting your first customers. And from there, we were, because it was the right problem at the right time in 2021, we got basically Uniswap, Compound, Synthetics, all these like big DeFi protocols, even in the first month of the launch, right? And then very soon we were able to get Aave, Gitcoin, and other big user base, right? And that's how we turned it into like a full. And then we raised from Sequoia Capital and Tiger Global in 2022. So everything, it was like in 6 months everything happened, and then we were at like almost billion plus AUM very fast. So it was not a complex technical project, but it was the real need, you can say.
It's funny how simplicity wins, right? I mean, I can only imagine the type of stuff you were used to code and problems you you're used to solve in the cryptography space. But when you tackle something that is a real need and kind of hair on fire situation, it just clicks, and then everything that didn't exist before just moves really really fast. And so you guys were out. You acquired a bunch of customers. What is the state of play these days? What's in store? I mean, if you can um, allow us to have a peek on maybe numbers or a little bit of a roadmap, because between that point and now, the underlying protocols also evolved quite a lot, right? You were talking about the gas fees we have now. In select chains, you have account abstraction, and you have gas stations and sponsored gas and all that stuff. The layer twos are everywhere. Like with the click of a button, you can actually spin up an app chain really quickly with a couple of validators right there and then. So, walk us through what that change in landscape actually prompted you guys to evolve and adapt and continue to build.
It's a great question. So first of all, like what I was working on by economy is actually account abstraction, right? And we didn't call it account abstraction at that time, but it was like building this gas relayer engine where end user don't need to pay the gas fees to interact with any application. So I built that entire gas abstraction infrastructure in Bioeconomy, right? And it's still working. So I think like by understanding account abstraction from very early days, even my like social key recovery solution was also account abstracted. It was built on Shamir secret sharing, and it was like multi-chain by default. There was chain abstraction as well, but it was too ahead of the market. And nobody needed it in 2018, right? Because Ethereum didn't have any product market fit at that time. So what changed over the last 2 3 years? What I would say. So regarding the numbers, we have like 1 billion plus AUM on the platform, like 300 plus client base, and then we have 1.2 billion plus in payouts volume, basically. So yeah, it's like real customers are there and they're paying to their employees and grants, contributors, whatnot, right? They're actually using it as a neobank for on-chain finance, you can say, and then they do financial reporting with us and cash flow reporting, all these things. So the vision evolved into something like very huge and big, and that is like building like a full suite treasury management solution. So if you think about today, you have, let's say, Brex or Mercury, right? In US, you go to Brex, you do your financial reporting, expense management, and you can buy T-bills, treasury bills, and earn 4% interest rate in 2 clicks, right? So, and in Mercury Neobank as well, it is like a very similar flow. So our idea was like, can we do very similar here as well? Like where, if everyone can get this risk-free rate, like 4 5% yearly on their cash, right? As a business, it's amazing, right? Like you are actually more protected basically because Federal Reserve can always buy the T-bills back, right? So it's like a very interesting mechanism. So that's how we decided to launch our stablecoin, which we can go more deep. And we launched in like Jan this year with Paxos. Paxos is one of the largest stablecoin issuer. They work with PayPal, Mastercard, Stripe, right? And we work with them very closely to issue our own stablecoin. And yeah, there is like an interesting mechanism how it works and all that. But yeah, in short, like the the payments and accounting was like our bread and butter, and now we are getting into actual treasury management and asset management aspect.
If you have that client base and they have manifested needs for specific features, I mean, then the delta gap is so much easier once you're in into the door, that you just get more loyalty from them just by co-developing something that solves for the emergent problem right there. Now, because you're in this kind of orchestration, payment orchestration space, I must ask you about what is your current stance, if you have plans or if you can share them, on this entire category of AI agents actually operating on chain actions on behalf of users. Is this something you guys are investigating, researching? Does it make sense in your mind as to, yeah, for us would be perfect? Where would that fit? Give me a little bit of a taster on what that looks like in your mind.
Yeah, I think very soon we'll pass this hype cycle. Still, I would say it's bit hype, right? Like if you use AI today and it's like really smart, but the real use case for now is like accessing this intelligence, right? And then you need to do a lot of work to make it work, right? It's not like, but I think we have came so far where basically you actually have some intelligence, right, which you can talk to, right, which might be better than your peers, right, which might be better than reading a lot of books, right, which might be better than doing a lot of courses, right. So it's like a good delta, but I don't see right now like you can just automate everything, or especially like last treasury payouts, right. It's not going to be very straightforward. We need like that basically protection, you can say, and protection can happen through automated systems as well, but through basically manual intervention and some friction, some time locks, etc., right. So yeah, I think I see definitely the world where all these agents or AI will be used in basically expense management and for reporting majorly rather than execution in the first place, right. For reporting it makes total sense. Let's say you are categorizing your transactions, you want like certain tax regulations need to be sorted, right. You want to double check your sort of bookkeeping, right. All these things are very complex for accountants and bookkeepers. So these things AI can solve much easier and much accurately in the beginning, right. And maybe it reduces your time by orders of magnitude. For execution, I'm still like the way I see the payments world and all that, right. In the real world it's a very compliant system, and you just need like more maybe like AI should use more on the fraud protection, which is used by Stripe Radar already, right. But yeah, overall on execution side I'm very bullish, but we are not there yet.
I hear you. I hear you. That's a great take because I keep, as with any new technology in the world we live in, everything seems like a miracle. There's this, over projection of what it can do and how big this is going to be. And big banks and big consulting firms will push out a report that says, "Oh, this is a $1 trillion market," blah 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 blah, and they have no interest or incentive to tell a reasonable truth because they gain on the upside. So it's very biased, and I'm with you on there. In terms of challenges in the industry, one thing that I really like to probe on the guests is, what are the largest challenges now? Because it feels like the world is becoming more accepting of crypto or blockchain. There's all sorts of movements in different markets. Regulators are coming out of the woodwork. Just last week, we had a treasury draft here in the UK and a discussion paper by the FCA. We're seeing two major bills going through Congress in the US. whereas the Middle East is moving super fast in giving clarity on a variety of layers into this new paradigm. So it's never a dull moment, right? What are the challenges that you see today as an industry that are kind of making you lose sleep, or what are the things that are really drawing your attention?
I think it's a great question. Obviously, things have like much better for the industry specific niche we are operating, but generally crypto has like a branding problem. How whenever we talk to any TradFi, so recently we talked to like 100 plus family offices in Singapore. These are like the largest of the largest there, and the image of crypto and then the ideas and the products is not so great, right, in the traditional world. But obviously we have come so far because of the speculative aspect, and any other new technologies has like a lot of speculation built into it. Crypto just makes it like 100x 200x more with the tokens and all that. So definitely people are here to make money. Like majority of the people are still there here to actually just make money and don't push the industry forward. But the percentage which is actually which cares the industry should move forward is like increasing from the last 2 3 years. And players like Circle, Tether, right, they have like real use case. Like stable coins are actually being used on ground, right? People want to buy things with that. I live in Dubai. In some stores you can just buy your groceries and your daily needs, and you just pay through USDT, right? So obviously crypto has come so far. So this money on the blockchain through stable coins is like a perfect sort of product market fit. And because it is so big, basically now the fintechs and other sort of institutions have started to build on top of it. And because all this happening, they're influencing the government as well to really build right frameworks to regulate it. Because once regulation comes, the entry to barrier is like very less in terms for the user, because user have like, because once regulation comes, right, like a lot of competition will come basically. And then the simple user can access very easily. For example, right, well, to build a bank, it's a very highly regulated activity, but to actually build a new bank, it's less regulated, right, as compared to that, because you can build on the banking infrastructure. So once these kind of frameworks exist, a lot of new banks existed, right? So and the end user is just getting access to the JP Morgan maybe through some neo bank, right? So, so my thesis is very simple, right? This money use case is the real use case, and the next phase of this entire thing is the yield, is the interest rate. So once you have like money on chain, what you want to do? The finance works on credit, basically. It's as simple as that, right? But this new financial system will be transparent by default, right? You don't need to think about transparency. Oh, we are transparent. You don't have a choice here. It's already transparent, right? So so that is like a new financial system, and that will move fast, cheap. And the end user does not care what technology it uses. They just care it's faster, cheaper, simple, right? So I think stable coins are like that, and that's why it's working. If it is not faster and cheaper, whatever they do under the hood, it does not matter. As long as they're faster and cheaper to settle than the normal currency, they will win, right? So that is the framework which works with the user mindset.
As a decentralization maxi, it kind of kills me a little bit, because decentralization really isn't important until it really is. Like, and I'm well aware of that. But you outlined two factors that are very important in user adoption: is ease of use and cost, and that will definitely soar. I want to double click on one thing. You used product market fit in many of your answers, and I love that you're tackling the problem like that. But I do want to peek a little more on your own process, because you're cryptographer, heavy engineering type person, and you became an entrepreneur for sheer force of will, I want to say. What was your process in transitioning, or better yet, aggregating more of those skill sets into your own day to day as you developed your own product? I mean, they're complementary capacities, but they're very different in nature. And I love that you're talking about product market fit, because as a product person, that's what's on my mind all the time. But I'm nowhere near an engineer anymore. So what was your process, and how do you keep that going, that curiosity to get better at that?
So I'd learned like by a lot of mistakes. Honestly, there is no easy way and no easy answer to this. Just learn, you do a lot of mistakes because as a core engineer, you get so much excited when you see like a core technical problem and you just solve it and then you know nobody needs it and then you try to fit to the user by like, overselling or whatever, right? And then nobody replies, right? So when we launched this, like the initial version of CoinShift, like I have my mentor from Consensus, you can say, and he has like this. He told me like this one thing: the difference between a product and a project is the user, basically, right? And then he's told me like about basically traction solves every problem in a company, literally every problem. Even if your co-founder fights, even if your team leaves you, even if nobody is listening to you, if you have customer, you will make sure you will win. So these few things just stick to my mind, and there are a lot of lessons he gave me, right? But I think these were like, it was like a 3 month sprint with him, and from there I think like the major thing we see when you are into 0 to 1 game, right? Like when you want to do something from very scratch, the basic idea should be like try to figure out basically customers from day zero, even without building. And it is very, very hard, literally very hard, and it makes you uncomfortable because what you can sell, right, without building anything. But with this world of AI and with this like internet era, right, you can prototype anything on the wireframe. You can prototype very easily. You can prototype everything on Figma. You don't need to hire an engineer to do that. It's just that it makes you so much uncomfortable because you don't have a product and you need to talk to the customer, right? But what a lot of people don't understand is this uncomfortable thing will actually tell you the intensity of the problem, basically. If the customer is not even ready to try or prototype, like most likely you can, it is going to fail. And a lot of people say, because of Steve Jobs fanboys, right, they always say like how they it's like, until you show to the customer they will never know it. And I don't buy that, because that time when Mac came, right, overall PCs came, that was a different time. People have not seen good products at all in their life, right? So it was like, basic cycles and basic cars people were driving. They have not seen like amazing products, right? But in the last 30, 40, 50 years, there is a saturation, right? What is the peak of iPhone? What you can build more than that? Yes, you can go to this, Oculus and all that, but phone is phone, right? Like you love iPhone, whatever, right? So users are very much sophisticated now. Even the normal users in some village as well, they understand what a good product looks like, right? And and you just can't just be in your bubble, basically, to build something for 7 8 months without even talking to anyone. I'm not saying to only work with users. Just go out, articulate, right? Articulate basically as much as possible. And if you cannot gather any community, most likely the project will suffer, basically.
Yeah, no, you're right. I mean, after all, we're still solving for other people, and we can't assume much, right? We can hypothesize, but it requires validation, and I think I do subscribe to the jobs to be done framework. I think that's kind of one of the smartest frameworks you can possibly, especially if you're dealing with individual, like consumer retail type users. But even in B2B, there's always a C somewhere in that journey that you have to cater to. So I absolutely subscribe to your approach there. Um, Obviously, I want to make us progress in this conversation. So you joined crypto circa 2017, right? That was your breakthrough year. um, for the people in your past that have not yet joined crypto and they reach out to you, hey Tarun, you're doing great, I see you're there, like, or Bitcoin has another all-time high, and they reach out to you, hey, I saw Bitcoin is ballooning again, I want to join crypto now. What's your usually conversation? Do you have a welcome to crypto? kit that you offer them? Like, what's how do you onboard new people to the industry?
Yeah, a couple of my friends like working in TradFi are already in crypto. Basically, they have founded their own companies or working, you can say. So obviously, I converted my close circle already, right? And they're good enough, intelligent enough to understand, and they're progressing like very fast. Uh, for normal like retail or somebody new, right? I always basically tell about the history of self custody, right? How we used to do this gold under the mattress in the very early days, and cash is a form of self custody, but it is not scalable. It cannot work at scale, right? And that's why you need like a third party institution. And once you start speaking their language, their denominator, right, what they understand rather than the technology, then it's very easy to tell, okay, this is the wallet. Obviously, it's still very complex, but because of like, Coinbase wallet is great, I feel like anyone can use it, right? You recommend these kind of wallets, even Phantom is great, right? So they can use this wallet, they can try with like $1 2, and once they like it, they even explore themselves, right? New things. And yeah, I think crypto overall education is going up, up, up. But I think majority of it still it's trading, and I'm not against that. It's like trading is the major use case in the world, right? But for somebody who is actually keeping their money in some like local currency which is depreciating, right, and inflationary, they see the value of dollars, right? They actually see that value, and by default, it is profitable for them if they just keep money in dollars and don't do anything, right? And so it's just like a better world, right? Like now it has equal access, basically. So I think somebody from A16Z said stable coins are getting the WhatsApp moment, basically, because after WhatsApp, everyone can not even think about how to message, right? It's just their messaging. So basically, so it's like with stable coins, you will just move money. You will never think this is the problem. You'll just access to dollars, access to any asset in the world without even thinking twice.
Yeah, let me double click on that because you mentioned you guys spun up your own stable coin. We know that this is a market that is concentrated at the top, maybe between Tether on USDT and Circle's USDC. Um, I think the question here is wouldn't because they all exist in different chains. Both USDT and USDC are available in multiple chains, which is already a fragmentation factor. Launching more stable coins, does this not increase fragmentation? How do we deal with that as an industry?
Yeah, it's a great question. And that's why it is very important, right? So how we see this, like stable coins are the, a lot of people just see stable coins as a money, right, on the blockchain. But my thesis is like very different, right? I have written like this thread as well. Stable coins is like the new financial infrastructure. It's a new system, and the lending, banking, and overall stable coins will converge into one thing. So it's not about only money use case. Money was the first use case, which is solved by Tether and Circle, right? But once everyone has USDC, the next thing, what you want to do with that USDC? Either you want to transfer that or you want to hold it. If you want to hold it, right, why are you not earning yield on top of it, right? In your bank account, you just deposit and you start earning yield on top of it, right? So the idea is, let's not go in competition, and we cannot on the money use case, right? How about the interest rate use case? Once you have dollars on chain, what you can do with that? You want to make a little bit more money, but the question comes, how much risk you want to take, right, on top of it. So can you build a product which is a better or an equal risk profile than Circle, right, and still gives you a interest rate on top of it, right, with a lot of secondary liquidity and a lot of primary liquidity, right? If you can build something like this, it has the chances to attract. So that was the question I was thinking for 1 year, right? And that's how we connected with Paxos, and they were about to launch their stablecoin, which gives you a treasury bills yield, basically on a daily basis. So the way Circle works is USDC, right? If you hold USDC, there are reserves backing it, and those reserves are invested in overnight treasuries. Not all the reserves, but let's say 10-20% of the reserves, and rest is like maybe in cash. But yeah, so they invest all that those assets into T-bills and government money market funds, and entire revenue is basically earned by Circle. And there is nothing wrong in that. I'm just explaining basically how their business model works, and it is not like it has a money transmitter license, and it works with the New York Financial State of Department, right? So we decided like, okay, let's work with Paxos. They are about to launch like a stablecoin, which is going to work with Abu Dhabi government, right? And it is fully regulated in by Financial Services Authority in Abu Dhabi. And what they are doing is they are investing their reserves also in the treasury bills, and they are passing that yield to the end user on a daily basis by abstracting the entire complexity. So what does it mean? If I am holding USDL, you will see your USDL balance grows up every day, basically. And you don't need to worry about anything. Everything is managed by Paxos under the hood. So that was the idea. And now we are taking that USDL and we are putting into a lending infrastructure, basically, so that you can earn more yield. So you're earning the risk-free yield, which is earned by Circle, right, as a user. And then you want to earn additional lending yield, because once you have the stablecoin, you want to earn more interest rate, right? And then we are lending it out to Coinbase BTC holders or Lido's STETH holders or PaxG holders very soon. And that's how you earn interest rate more. And then we work with Morpho protocol, which is like a permissionless protocol, and you can see where the actual allocations are happening. So CoinShirt cannot is not going to lie or do something. You can clearly see what are the allocations, and if you don't like it, our system has a guardian system. You can basically withdraw your entire money, right, an entire stable coin, and you can veto the curator. So this is the unique feature our risk manager has built. You can veto the curator basically, right? So all this basically happens in a very simple manner. So you can come up with your USDC, you swap into our stable coin, and you start earning this dual yield on a daily basis. You don't need to do anything extra.
And in terms of other interests, I know that building is very consuming, but what other interests, other in the industry or outside of the industry, do you keep? Is it whether it's music or theater or movies or whatever? But also in the industry, what are the other things you're seeing in the industry that gets you excited?
I just love, I think, yeah, outside basically industry, I love dance, I love hip hop, basically, I love tennis, I love chess, basically. I think there was a time like I used to play chess every day, online, offline. Whoever meets me, like I ask, do you play chess? I like Mortal Kombat. Yeah, I'm very proud. I'm good in that. So, so overall, yeah, I think games I play, and on the other side, basically in the industry, I think like how to work with TradFi, right? It's a very different game, and how to have a legal structure there and how they think. It's very fascinating to me because I'm an engineer first, right? I'm not like a financial like professional, you can say. So it's very interesting and fascinating to learn how they manage risk, how they think about risk, right? They have gone through this 20 years of risk management when this Lehman Brothers and 2008 crisis happened, right? The thought process is totally different, and that allows us like technologists like us to really innovate, right, for them, and so that we can attract the largest capital in DeFi, right? So we're trying to work like with couple of family offices and very large ones to really figure out, okay, this kind of product will work for them, and we kind of want to build with them, right? Rather than, okay, this is the product and buy it. This will not work like this. So this is like very fascinating. I've started to learn how risk management works, hedge fund works, doing some courses on basically hedge funds and all that. I didn't know all this, so it's like it's very fascinating to learn finance for me. And apart from that, I just love basically this the world of entrepreneurship, how basically Perplexity is growing, how AI companies are growing, what they're doing, where they are differentiating, etc., etc.
Listen, we're about time, and I really want to thank you. It's a fascinating journey, and I know that this transition or incorporation of a new skill set, completely different, is it's a very hard thing to do, but also very rewarding. So I'm so happy that we were able to get you on the show. So how can people keep tabs on what you're doing? Whereabouts are you, and what CoinShift's doing? What's the path there?
Yeah, so we update everything on our Twitter handle, X handle, you can say, like 0x CoinShift. You can follow me on basically find me on like Tarun Gupta 1475 on Twitter. Yeah, I'm very active there, basically, and yeah, I think and or like CoinShift.xyz is our website. You can see what we are working on and what is next.
Hopefully we'll bump into each other in a crypto event somewhere in the world. Hopefully that will be true and will be a lot of fun. Thank you so much for coming, and I see you next time.
Thank you.
Catch us online. We're on Instagram at BlockDropsPodcast, on Twitter at BlockDropsPod or 0x Mauricio. We're on Lens at blockdrops.lens. We have a newsletter on LinkedIn. Write to us at blockdropspodcast@gmail.com, and you can listen to the Blockdrops podcast at Spotify, iColab, Faberbun Tech, and all of the other major streaming platforms. Yay! Shout out to Tarun Gupta for sharing his incredible journey in Web3 with us, and also to Anouk Morin for making this conversation possible. Don't forget to leave the ratings on your favorite player and check out the merch store at blockdropspodcast.xyz. This is all for today. Stay rare, stay weird. LFJ.